Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of January 20th. Bit of an up and down weeks recently, and as I was going through my things, I kept kind of going back and forth on how aggressively I want to be trading. And the same thing came up as last week. If I really have to think about it, then another way to put it, if there is a question, there is no question, as one of my buddies say. So yeah, if I have to really think about it, then it's not super easy conditions. So I'm definitely still kind of taking it easy on the swing trades. We'll talk about maybe gaining a little bit of exposure and what basically a cautious environment looks like. But still, market health indicators poor, but they're kind of moving on to the cusp of being better. The charts on the cusp of looking better, going through some scan lists. There are some good looking trade setups out there. So it's one of those times where it could get favorable pretty quick, or it could deteriorate very quick. And I don't need to be the first one into a move. If we start moving up again, we're probably going to have a okay move to the upside after this correction, so that there'll be time to get in. For those that are really antsy, maybe we could take some trades, but caution to me means tight stop losses, tight leash. By tight leash, I mean basically if I'm taking a trade in these types of conditions, it's got to work super fast. If it doesn't, just cut it. Like even before the stop losses hit, like tight stop losses, if it goes up and then starts coming back down, it's like, no, we already know it's a tougher environment. That's how I prefer to trade these environments, or just don't trade at all until conditions are better. So the basic summary is market conditions are still poor, but on the cusp of becoming more favorable. Same with the price action. Bitcoin remains in a no trade zone for me, but it did push back to the top of the range. We'll discuss the recent trade and very short-term trade, and what the bigger picture is depending on these levels. There are some watch lists there you can check out. If you're watching the video and you're wondering where this article is, as it gets updated each week, you can go to TradeThatSwing.com under Stocks, Stock Market Analysis, and Trades. The indices. So NASDAQ still holding above this, what I would call the prior major swing low, in a little corrective channel lower. The cusp I talk about is we're at the top of this channel. So it's easy to think, hey, if we break out, we could run higher, which is true. But we also basically, if we have a negative day or two, we start moving back to the bottom of the channel. So it's one of those kind of inflection points where, I'd prefer to maybe see a move out and then the pullback that stays outside this old channel, and then we start to move up. So yeah, I'm going to miss maybe a couple trades in here, but I feel better about those trades once I see that move up, then the pullback, then I get in. Same with the S&P 500. It was basically right at this inflection point we talked about. It did not really stay below it, so I would consider this uptrend still intact, but we're chopping around. And same thing with this one. If it starts breaking out of this little kind of channel we're in, hey, that's good. Wait for the pullback, or if it's moving up and there's some setups that you see, great in individual stocks. But I think the big one would come move up, we get the pullback, and then we start turning up. During that area, once we start moving up, that's when I prefer looking for the trades then. And yeah, we may have missed a couple that have already taken off, but we'll be able to get them on the next pullback. Canadian index, kind of like these other ones, it had a pretty big sell-off and it's recovering. These NYSE Composite and the Russell 2000, they are in downtrends. They've taken out major swing lows and have not made higher swing highs at this point. So still downtrend characteristics. Let's talk about Bitcoin. We had talked about this kind of 91, 92,000 level. And when we have major levels, especially when there's sort of a range type forming, these can be good levels to watch. So we had talked about if it breaks below and has a pullback that stays outside, or if it moves just a tiny bit in and then starts rolling over outside, that'd be a potential short trade. But notice this, it does not, the pullback, there's no, it just breaks and then you start clearing above these other candle highs. This is a nice opportunity to get in. We could have one again on the upside. These, if it has like a false breakout and then starts rolling over below candle highs, then that range is continuing. So longer term, we can see this range here. It's still fluctuating around this 100K mark. I got pretty much all the long-term positions out around 100K. So I'm waiting for the next kind of big thing to happen to say, are we going to continue running to the upside, or are we going to get a correction? At the moment, since it's holding up in this area, it looks like, you know, it's holding up. But I'd like to see a move up out of this range, and again, a pullback that stays outside. More recently, we've developed this little range here. We had a high here, a high here. We're trying to break above it. So you could draw another little rectangle in this area. And that kind of, what I call my range rules, would apply again. So if we pop out of this, keep going up, we stay above this area, which is kind of like 100K now, and then start bouncing, that's favorable for a possible move above this one. But that's not confirmed until basically we break out of this bigger range here, have a pullback, maybe into this area after we've moved up to, you know, 112, something like that. And we get a pullback into this area. If we start moving up there, I feel good about that long. Of course, there's no guarantees. Nothing's 100%, but I like that. And right now, when it's in a range, unless there's a lot of room within the range, I don't like trading. So I don't want to take a trade here with, you know, a recent high right above it. I do like this false breakout trade because then you have the whole range moving back up toward the top. Same if there was, I'm not going to go short, but if there was a short up here, would be a possibility. If it fails and then starts rolling back over to the downside. But yeah, we basically see this range, while it's inside it, not super interested in accumulating a big long-term position. Once it breaks out or makes its decision, I'm waiting for that next pullback after the breakout, and that helps me decide. Market health indicators. So that's a chart of the S&P 500. Volume did peak up on these gap up days. This one was like 1.8%, I think, and this last one, yeah, about 1%. I didn't consider them follow-through days. For one, this is too early in an attempted move up. We're just basically kind of whipsawing. Also, we're in a 5% correction from the high point to the low point. I'm going to look for follow-through days after a bit bigger declines usually. Yeah, so it didn't quite fit the bill for a follow-through day. But either way, you know, favorable sign that we had volume increases on these days up. This still, we haven't recovered from this big sell-off day. This was back on, I think, January 15th or 18th, or December 15th or 18th. Yeah, December. And we had that big sell-off, and we've just kind of taken a long time to try to recover that. You can still see bigger volatility days. That is not representative of clean upward movement. Generally, during long periods of moving up, it's a little quieter. We can get a little bit of volatility. This was an uptrend, but a little bit more movement. And so this is definitely within tolerance, but we still haven't recovered this big drop. So that's why I still kind of left this one as a frowny face. We're getting this whipsawing action following a big drop. So ideally, we move up out of this, volatility dies down a little bit, and we go on trading, and it's more of a period like this. And that's why I like trading, easy money. When it's whipping up and down, easy to get stopped out. This one I put as neutral. This is the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number. There had been a bearish divergence where this one got all the way down to this swing low, which would have been equivalent to this on the S&P. So that was kind of saying like, hey, we could get a big drop. But then that was kind of nullified by it started making some higher swing highs before the S&P. So this one moved above that one. So that was kind of saying, hey, we're moving up. We should be able to get up to this level. So they're kind of conflicting. And so, yeah, I'm calling it neutral. It's not really telling me a whole lot. This is up volume divided by total volume. Again, not telling us anything. I'm looking for extreme readings to this top black line or this bottom back line. And all these, even though some of them got kind of close, I'm waiting for the extremes. And this one, they all stayed in the middle, so that's just neutral. This is percentage of stocks above their 50-day moving average. The red line is the S&P 500. The turquoise bluish line is all U.S. stocks. So right around 40% of S&P and all U.S. stocks are above their 50-day moving average. I generally find it much easier to make money on the long side when most stocks are above their 50-day moving average. Most stocks moving up. Right now, that's not happening, but we could, if we get a couple good up days, this would be back above 50%. So kind of like the price chart showing, we're on that cusp of maybe flipping to bullish, but a couple days the other way flips us right back, and we're back down here into only 20-30% of stocks above their 50-day. So basically an inflection point. Ultimate indicator, how many quality setups are there? There are trades that are working out there. I discussed last week. I'm thinking very short term though. Like if something's got a really high momentum move going on and I get a nice setup, sure, I'll hop into it. I'm trying to avoid holding overnight too much just because we can get the gap ups, gaps down right now. But yeah, short-term trades, I can take advantage of it by day trading if I want. Of course, I realize not everyone day trades, but big movements intraday right now, so there's the opportunity to capture a chunk of a move, even if you're just holding it for half a day. And I am seeing some nice setups. I ran just kind of a quick scan going through my charts, and there are some pretty nice setups out there. So there's that option. It's still a cautious environment, right? Conditions are poor, but kind of on the cusp. The charts are on the cusp. So we could, if we see some nice trades we like, we could take them. But again, I'm going to think of them more as gradual exposure, see if they work, keep the stop losses tight, not giving much room if they don't really do what I want because I already know conditions aren't great to begin with. So yeah, I'm just trading that way. So cautious here, I basically describe what I think of what's cautious. Minimal exposure and then gradually add if something's working. And that could just mean you could add to the one position you have, or you could add more positions in different stocks as you get setups. Tight stops, top quality setups. In really good conditions, it's kind of easy to make money. We can be more lax because pretty much everything's just going up. When conditions are tough, you want the leaders, the stocks that are doing best, the best quality setups, the ones that are offering the nicest risk reward. So if you find like 10 that look okay, I would narrow it down to like one that I like and go with that one. Start with a small position because conditions we know are not great, but could improve quickly. Sectors on the move, not really blown up at the moment, but main ones: technology, energy, industrials, good across the board. Sorry for the small thing. I'll make this expandable. Information technology, industrials, energy, tops over the last 3 months. Energy, information technology, industrials, tops over the last month. And they weren't the top over the last week, but they were up there. Industrials, one of the top performers. Information technology, still pretty good, right? Like all of these did really well. and energy also pretty good. This is just aware. So these charts, I opt to use them from Chartmill instead of FinViz, simply because these are, I'm not always trading the largest cap stocks. I'll trade setups in small companies. There's been a lot of little tiny AA companies that have had huge runs, and quantum computing, like, small market caps but huge runs. And so what I was saying, the sector performance is just an equal weighted of average stocks in the sector, or equal weighted amongst all the stocks in the sector. So it's, if NVIDIA moves up 5% and a little guy moves up 5%, the average is 5%, as opposed to if NVIDIA moves up 10% and everything else moves down 10%, a lot of other sector indices will show the sector as up 10% simply because the biggest stock in the sector, which is probably NVIDIA or whatever it is, moved up, but it's not reflecting all those other little stocks. So this weights it more kind of, if you're trading kind of a typical stock in the sector as opposed to simply the biggest ones, then this would be more representative than a lot of other kind of sector, even sector ETFs, because sector ETFs, unless they're equally weighted, are generally going to be have most of their capital and heavily weighted toward the biggest stocks in the sector. And as individual traders, we can trade whatever we want. We're nimble. We can, trade big positions even in small companies, big positions for us, whereas a hedge fund couldn't take a big position in tiny companies, but we can. So this kind of shows us what the typical stock is doing as opposed to just the biggest stocks. That's also the reason why I like looking at all these indices as opposed to just the S&P 500 or the NASDAQ 100, because they're the biggest companies, and even them, they're heavily weighted toward the biggest companies within those indices. So if those companies are doing well, they drag up the whole indices. If they're doing poor and everything else is doing good, they can still drag down the indices. So I like looking at multiple things. And then this also gives us a little bit different perspective. It's including all the stocks in the sector equally weighted to give us a reference point for basically how the whole sector is doing, not just the big guys. So what am I doing right now? I'm enjoying the volatility, mostly just day trading. Swing trades, I would say, are possible right now. I may, we're kind of on that cusp. If I see some setups I like, again, tight leash. Kind of thinking short term at the moment, but if we get that breakout and then all our conditions improve, then that would be okay. I'll add some more exposure, kind of go back to normal trading. But it's either sit on the sidelines or be very cautious. And yeah, that's basically what I'm doing right now. So have a great trading week out there. Hopefully, for most of the world's sake, most people like when the stock market's going up. So I hope we get a move up and out of these little corrections we're in, but we shall see.